Mike Tedeschi, Wealth Management Advisor, Perspective Wealth Planning. With this week's market breakdown video, we're going to take a look at the four major U.S. indexes. We'll look at the U.S. dollar and commodities, but today we're going to pay special attention to our breadth readings as we've had some historic readings here over the last couple of weeks from one of the lowest breadth readings since 1962 all the way to one of the strongest breadth readings in the last 50 years. What that has historically meant for us, let's jump right in. Now, first and foremost, when we take a look at the S&P 500, we had our breakout that happened right there in October where we pushed up to new highs. We flattened out, and as you can see, we pulled back here over the last week or two. But where did we pull back to? We pulled right back to that breakout zone. We didn't break down. We did not create a lower low. We still have higher lows, and then we had an extremely strong bounce over the last couple of sessions, and now we're right back up towards those highs. Looking for that follow through here to the upside above that 47.45 level, and looking for this 4,500 zone to continue to act as support in on the S&P 500. We take a look in at the Nasdaq, very similar looking chart here. Right, we still have our higher lows and our higher highs, so we are still in an uptrend here. Clearly, even though we had some weakness, we were unable to close underneath this breakout line that we had again back there at about 10.18. On the Nasdaq, and we had a very strong bounce right back up. So we're looking for that move back over that 16,500 and then a push towards those all-time highs in on the Nasdaq. We come in and we take a look at the Dow. The Dow, much weaker, but we've talked about this a lot this year where I really viewed the Dow not so much in an uptrend, but more in this sideways range that we had been trading in, like the Russell, and it had slightly higher lows in place, and it still actually has slightly higher lows in place. So the bulls are stepping in sooner and sooner in this, but really the Dow has spent the majority of the year inside this range. We had a pullback pretty deep here, right down towards the bottom end of that range. Again, we put in a higher low, and then we bounced right back up and are pushing back towards those highs. So technically, everything is still fine here in on this chart. And the same thing goes for the Russell. The Russell, we've talked so much about the importance of this area of the market, spent almost the entire year inside this range. Right? We have clearly held that 2100 on the support side, and we've run into that issue about that 2350 level. We finally had our breakout, and this right here was a very good sign for the overall market. We have a long trading range from one of the risk-on areas of the market, and that breakout to the upside. The fact that we were unable to hold on to that breakout for more than a week or two and immediately fell back down to the bottom of the range is a very negative sign. Now, if we lost the bottom end of that range underneath that 2100 level, it would be very concerning. But what happened was the same thing kind of as the Dow. We had the breakout, we pulled back towards the bottom end of the range, held, and have started to bounce back up. Bulls really want to see us get back up over that 2350 zone on the Russell and continue to head to the upside. If we start to roll over here, we break below that 2100, then this area right here becomes a false breakout. Right? So if we break the bottom end of this range, this is now a false breakout, and that does not bode well for things moving forward. So let's continue to pay very close attention to what's going in on the Russell. But for now, all of the indexes did not go and make lower lows. They held on to their key support levels and made a very strong bounce here over the last couple of sessions. You guys have seen me lay out the Nasdaq McClellan Summation Index quite frequently as an important thing to take a look at from a breadth reading standpoint, and we have talked about the 300 level in on the upside. We are looking for a move above that to get a solid breadth reading, and the important level has really been about that 300 here over the last 2 years on the downside, so really between this 300 and negative 300. Now, over the last couple of weeks, we've pushed all the way back down, back to the August lows, and this is what's crazy because the markets themselves, the Nasdaq, S&P, they're all up there near those all-time highs, but the breadth readings are so different than what we had at the beginning portion of the year, meaning underneath the surface we're having less and less participation. If you paid attention to those higher beta growth names, they have been absolutely destroyed here over the last 7 months while the markets themselves make those highs. So underneath the surface, things have not looked great. The bounce happened right where it needed to, because if we fell below this zone, we would have made a new low in terms of breadth readings for the year and likely would have continued to see that downward slide. So we're paying very close attention to this level right here, that negative 500 zone, see if we can get that turn back up and head higher here into the end of the year. The end of November in terms of our breadth reading was historically horrific. It was in the bottom 2% of all days since 1962. We saw strong selling across the board to end the month of November. It carried over a little bit into the beginning of December, and then we saw an incredible thrust higher, where we saw 3 out of 4 sessions where more than 80% of names rose versus fell. And combine those two things together, it does look historically very solid for us over the medium to long term when we look at the data. There are not very many signals at all, which is the problem with this data set where we've only had 6 or so. But a year out, 100% of the time, we saw positive returns with this particular setup. So it does bode well when you get those strong breadth readings. They typically tend to mark bottoms. The thing is, most of the time you get these kind of breadth readings, and you can go back and you can see it right here, is down after we've had prolonged moves to the downside, right? The only time that we have seen this type of reading and we were not in a downtrend was back in 2006 when we were on that upswing off of the .com lows. And we saw another rise for another couple of years before we saw that pullback. You can go back to the 70s and you can see these types of readings happened all the way after protracted long pullbacks. So that's the one thing to keep in mind here. We're up near those highs and we're seeing these historic breadth readings both directions inside of a very short period of time. It's very unusual to see that type of action. But when we have those big up thrusts in breadth, it typically tends to bode well over the mid to long term historically when you take a look at that data. The other piece of the puzzle that we always like to take a look at is the US dollar. Let's jump in and see where we're going here. Now, the US dollar has rallied back up into that really important area from the middle of last year where we ultimately rolled over from, right? We had the bounce, and then it failed, and then we've rolled over. And we put in this potentially rounded bottom. We're putting in maybe a little bit of a flag right here, but we've stopped right at this resistance zone between 97 and 98. That's the level the US dollar needs to get over if it's going to continue to push back to the upside. If that's the case, I think we see a move back up towards that 101 zone. But as I've always said, resistance is resistance until it's not. It's got to prove itself to us, right? Right now, we're underneath that major resistance zone. And again, if we back the chart up and we look at this in on a monthly time frame, we're trading right towards the middle, right, of this multi-decade zone. And you can see that's right where we're at. So we haven't accomplished anything out of the US dollar since 2014. We're still trapped inside of this range, and we're right in the middle of this zone. Will we get back into the top box, or will we stay in the bottom box? We're certainly watching that closely, but the US dollar hasn't done much of anything over the last 7-8 years. When we start taking a look at some of the commodities here, things have not necessarily looking great. The gold is holding up right around that 1800 level. Right? But again, we were unable, and if we look at what this is here over the last year, right, it is just a series of lower highs. It was a series of lower lows, but now it's a series of higher lows. So we have a messy chart, meaning we don't really have a direction, and we've just kind of been chopping sideways here. When we start taking a look at some of the other metals, it does not look nearly as good. Right? Silver is right back to where it was back in September. It looks like it's got the potential to lose that 21 area. Right? This is the weakest it's looked in quite some time after that break above 25. And if it loses that, there really isn't much support until you get back down into that 19 zone. So we're watching that market very closely right here because it's at a key juncture. Platinum looks very similar. Right? It's a little bit stronger than silver in regards to that pullback from earlier in the year. It's hanging on to that 900 zone. But again, if it loses that low from back in September, this market no longer looks very good. When we take a look at our palladium, palladium keeps hitting on those 1700-ish low levels in this chart, and we have talked about this extensively, has not looked good for a long time. It was the leader in the space, and it is just rollover after rollover after rollover. This is not the kind of chart pattern that you want to look at from a long perspective. This is under a lot of pressure and still continues to be. So you got to hold over that 1800 zone, and really, again, in order for this market for me really to be interested in on the long side, we need to be back up over that 2250 zone. All right. We take a look in at copper. Copper has done nothing since February. It has traded literally sideways the whole year. We've had a little push up, a little push back, but it's traded above essentially that $4 zone. Can't get over that 480 zone. We're still watching, for the next move out of this market, but this is not an area that has had great interest for us here over the last 8 months. We take a look in at the energy space. More importantly here, crude held exactly where it needed to, and this is really important to take a look at. We had a huge sell-off from 85 all the way back down to actually this bottom out at 62. This is that support zone that we saw in August and September. We also saw for May and June. This area, this 60 to 64 zone is super, super important. We came down, and there was a lot of buyers sitting right here, and we drove it right back up. Now, when we look at this market, 75 is now that really, really important level. We need to get back over 75 if we want to continue to push. Otherwise, we might be back to where we were from April to essentially September, where we're trapped inside this 63 to 75 range for a while. But it was very constructive to see it hold that 62. We'll continue to watch it. Nat gas has fallen apart. And we have talked about this extensively here over the last couple of months. As we've said, if natural gas was unable to hold over 550 the last time we had 2 spikes like that, we saw multiple years of selling. I said if we fell back below that zone, 350 was a very reasonable target, and we essentially fell straight to that number right there. This market no longer looks good from the long standpoint. It's got to get back up over that 550 zone. There is some support here. If it loses this zone, I mean, you could see nat gas back in the 2s. So we're going to pay attention to this level right here. But it's done exactly what it did back in 2009 and 10 and 14. It had that big kind of blow-off spike and then immediate crumble. So really, he's got to hold that level and start turning back up, but that is not a market that looks very good at this point. A lot to take away from this week's video. Bottom line, breadth underneath the surface, not been fantastic. We've pulled back to some really low levels under the surface. We've seen a lot of names really get hit hard, especially in the higher beta and growth areas of the market, while the major indexes continue to push higher. If we continue to see deterioration underneath of the surface, usually the indexes start to follow because they're held up by fewer names. However, over the last few sessions, we've seen an incredible amount of thrust to the upside. If that continues, that tends to bode extremely well for the mid to long term for the overall markets. We're still clearly in uptrends. None of the major indexes in the face of all of this selling have lost any of their key support levels, so we continue to have that bullish bias in on the market until the structure itself changes. As always, if you guys have any questions, you want to reach out to me directly, you can at mtedeschi@perspectivewealthplanning.com or give me a call at 814-580-9881. I'd love to hear from you guys. I hope you have yourself a fantastic week. Take care.